Hello traders, this is Dion. Welcome to my channel. Alright, so today I just want us to talk about internal versus external market structure. Okay, so we already know how the market moves. Okay, well, not all of us, but I just want to give you an example. Okay, so the market doesn't always give us this textbook movement. Okay, it's not always this easy to identify the market structure. All right, market structure is very noisy. Okay, it's very noisy. Most of the time you won't just open your chart and you can immediately mark your break of structures and your change of characters like this. Okay, and when it's taking out your inducement, it doesn't move in this straight line actually. Okay, the market does not move in this straight line like this. Okay, it has pullbacks in most circumstances. Okay, or it's going to take out your inducement. All right, so that movement is what I want us to talk about today. All right, the internal versus external market structure. Okay, so when you are marking your break of structures or change of character, what you are marking is external market structure, the main structure, the analysis structure. Okay, the structure that you are looking at to know where the market is actually going. Okay, that's your external market structure. But when it comes to internal market structure, it's these movements. Okay, so you can already see that we are marking break of structures, but you still have these inside movements here. Okay, these can also be traded. All right, so let's just assume that this is a 4-hour chart. Okay, this is a 4-hour chart. All right, so by the way, before we even start anything, when we are talking about internal versus external market structure, excuse me, you should think of it as higher time frame versus lower time frame. Okay, analysis time frame versus entry time frame. That's how you're supposed to think about it. All right, so I already showed you some of the ways you can enter the market. So you analyze your chart on your main time frame. Okay, if your 4-hour chart is your main time frame, then you can enter under the 15-minute time frame or 4-minute time frame somewhere there. Okay, if this if this is 15-minute time frame and it's your analysis time frame, your main time frame, okay, then you can enter under 1-minute time frame. Okay, that's how you're supposed to do it. All right, so when you are marking here, when we are marking the highs and the lows, okay, we already know that when the market takes out your inducement here, you can mark your high there. Okay, you can mark your high up there. That's your high, and then when the market makes a break of structure there, then that is going to be your low right there. Okay, the market takes out this inducement right here, you mark your high. Okay, and then the market breaks structure, then you have a low right there. Okay, so you continue doing that, you continuously do that until it changes character somewhere down there. Okay, I hope most of us know by now how to mark our highs and our lows. All right, but I want to concentrate on these movements here. Okay, so let's just assume that this is a 4-hour chart. Okay, and then all of a sudden you have these movements inside. Okay, these movements you can clearly see, like it looks like the market took out inducement there and then started going to the downside. Okay, even broke structure there. Okay, Here, don't mark this as your low or that as your high, or you'll be lost. Okay, you'll be stuck in the low time frame bubble. Okay, when we say being stuck in the low time frame bubble, I mean you forget about the hard your main time frame actually. Okay, especially if you have that habit of not marking your structures, not updating your structures on the daily basis, you'll be stuck right here. And then when the market starts doing zigzag right here, you'll be very confused. Okay, so it's very important that you first mark your main time frame, your external market structure, okay, to see exactly where you are. Okay, so if you know how to mark your if you know structure mapping, you don't necessarily need higher time frame. So this what I'm doing, this is some sort of top down analysis. Okay, I'm not even putting in the no the daily bias or whatever, but this is also bias. Okay, because if we consider this as a daily time frame and then you go, it's still it's just the same. It's just the same. It's just the same idea. Okay, it's just higher time frame versus lower time frame. Okay, so let's just say that you've already marked this. Uh, let's just say that you've already marked this as your high. Okay, and you can already see that the market took out this low here. Okay, but then you see this movement here. Okay, now I'm not telling you to start counter trading. Okay, the way you can use this is that this is how I actually use it. Okay, so my analysis time frame, I keep talking about this. I think you already know by now. It's 15-minute time frame. Okay, so when I look at the forward chart, on the forward chart, I don't even need to mark all of this. Okay, maybe I can have another chart somewhere and just save it somewhere just to be looking at it once in a while, but most of the time I use it when I'm trying to hold a trade. Okay, that's when I use my high time frame bias, when I'm trying to hold a trade. Okay, and in most cases I just want to see those higher quality trades. Okay, so here on the forward chart, you can clearly see that if you entered somewhere here, this is going to be a counter. This is a counter trend. Okay, you are going against the trend. The trend is going to the upside. Okay, the market is going to the upside, but you sold here. Okay, so this is not really a higher quality trade. It's not a high probability trade, but under the 15-minute time frame, it has already shown that let's just say that maybe there was a change of character here. Okay, this is under the 15-minute time frame, your lower time frame. Okay, let's just say there was a change of character right here. Okay, under the 15-minute time frame. So this is what you do. Okay, under the 15-minute time frame, if you entered somewhere here, since it already showed change of character, your target is going to be on this low here. Okay, this is going to be your target here. You don't necessarily have to take all of this. Okay, just going with it. Already, you already know that, okay, on the forward chart, it's an uptrend. So this is a risky trade, actually. Okay, even if on the 15-minute chart it's telling me that it's going down, it's not going to go down for a long time. Okay, that's how you use your bias. Okay, so here I'm not trying to hold the trade for long. If it hits my target, I'm out. Okay, and most of the time I take my partials 50%. 50, when the market moves 50% into that leg, I'm out most of the time. Okay, so that's how you can see your bias. All right, here again, you can clearly see it broke structure and then started coming to the what, to the downside. Okay, it's coming here, it took out this low. This is where your inducement is. Now let's concentrate on this movement right here. This is not just it's not just a pullback here. Okay, this is internal structure also. Okay, here you can clearly see it made a pullback here, went up, and then like took out some inducement there and then started going to the upside. Okay, so now under the 15 minute, we are still assuming that this is the forward chart. Okay, so under the 15-minute time frame, maybe something happened here. Okay, maybe there was a change of character. Okay, and if there's a change of character somewhere here, and let's say this is how you take those higher quality trades. They tend to be higher quality, and then there's a point of interest somewhere here. Okay, this is under the forward chart. This POI, this is a what? A 4 hour point of interest. Okay, and then under the sorry, under the 15-minute time frame, you have some sort of change of character, and then you haven't entered yet, but it comes down again to take out this inducement here. Okay, so when you enter here, since under the 4 hour chart it's already in the point of interest, and then under your analysis time frame, which is going to be your 15-minute time frame. Okay, under your 15-minute time frame, it has turned bullish. Here you can clearly see that it was bearish. Okay, but now it has turned bullish. And then on the forward chart, it is already in the point of interest. These are higher quality trades. They tend to be more higher quality. And by the way, I'm saying that the 15-minute time frame is the analysis time frame, but entry time frame, you still have to go under the 1 minute time frame. Okay. Yeah. So you still need the setup for you to enter. Okay. So now these tend to be higher quality because here I said that if you entered here, your only target is going to be here. Okay, sometimes it won't even reach your target. Okay, it will just go back to your break even if you are good at trade management. Okay, and do not even take a loss. But here, if this is your high under the 15-minute time frame, okay, let me mark these things so that you put these things into perspective. I want you to be seeing what I'm saying. Okay, if this is a 15-minute inducement. Okay, this is internal market structure, and then you have this movement. Okay, so your break of structure is going to be here under the 15-minute time frame. Now if you entered here, of course your target is supposed to be there. So this is why I said that I use the bias to know which trades I can hold. Okay, already you know that under the 4 hour chart, there's this high that hasn't been taken out yet. Okay, now I've already entered here and my target has already been hit here. Okay, so here what I do is, of course I won't just let all the trades go all the way to that high there. No, that's very risky. Okay, so if you had 4 trades here, if you entered 4 trades here, or if you just entered 2 trades, let one trade hit your target here and let the other one, this is how you get two targets. Okay, this is going to be your take profit 1, this is going to be your take profit 2. Okay, so the bias, I'm saying this again, the bias helps you to enter higher quality trades. Okay, it helps you identify higher quality trades and also helps you to know which trades you can hold for long. Okay, so if you know that you are in a counter trend, okay, if you know that you are in a counter trend, this can also be your daily bias. Okay, on the if now when it comes to the daily takes very long for it to form uh, these structures. Okay, so you have to be very careful. Here I'm saying 4-hour chart, so your internal structure is going to be 15 minutes. But for the daily, you can go and if your analysis is on the daily time frame, then your internal structure is going to be the 4-hour chart. Okay, but it takes there is the rewards are very big, but it takes very long for you to actually see your results. Okay, so yeah, you have to put that into consideration. Okay, so as we go on, yeah, so this the market always does this. Okay, these small pullbacks, when you go down even under the 5-minute chart, somewhere there was a change of character. Okay, so when you have some sort of change of character, let's say maybe even 1 minute, okay, and then you see that the trade is actually going your way. Okay, your target can be on the inducement. Okay, but I'm not telling you to to start analyzing your chart on the 4-hour, and then I mean your bias is on the 4-hour chart and then you are trying to enter on the 1 minute. No, no, that's too big. It's the difference is way too big. Okay, at least 15 minutes to 1 minute, that makes sense. Okay, not 4-hour chart to 1 minute. That's way too big. Okay, you mess up very badly. Okay, this is just another example. Okay, in a bearish market, it's the same thing. Okay, you can clearly see the market going, it takes out inducement. Okay, so when it takes out inducement, it doesn't just go with a straight line like that. Okay, and then makes a break of structure. Okay, it makes this movement. If you don't know what you are doing, you just get stuck. You won't even know what hit you. Okay, so you can clearly see here, this is internal market structure here. Okay, the market has already taken out inducement here, and then you have this movement here. Okay, I hope you can see it. Inducement here. Now, if this is your bias time frame. Okay, when I say bias time frame, I hope you know what I mean. Okay, so from that other chart, I said that if your analysis time frame is on the 15-minute chart, then your bias can be the 4-hour chart, even the daily, if you know what you are doing. But for me, I use the 4-hour chart. Okay, it gives me something closer to where I am. Okay, so here, this is on the main time frame. On the main time frame, inducement is here. Okay, not the main time frame, the bias time frame. Okay, so we are still saying this is the 4-hour time frame. Okay, this is the 4-hour time frame. Okay, on the 4-hour chart, your inducement was here. Okay, but then when you go down to your 15-minute time frame, okay, you see these kinds of formations. Okay, these patterns forming. Okay, and then you start now. I don't want you to be marking. You always have to mark your market structure on your main chart, your analysis chart. Okay, If you want to zoom out to see your bias, then you can do that. Okay, it's very simple. And trading view or MT5 gives you that option to, if you mark your structure on the 4-hour chart, okay, on the 4-hour chart you can click like that and then go to visibility. Okay, you can unmark all of these, you can remove all of these, no, yeah, you can remove all of these. Okay, and then just say 4-hour chart, which means if you put it like that, then these markings are just going to show up on that 4-hour chart, so that when you're marking on your 15-minute chart, they won't be, it won't be too noisy. Okay, everything will still be clear. If you're looking at a 15-minute chart, these lines on the 4-hour chart will not be shown unless you go to your 4-hour chart. Okay, I hope that makes sense. Okay, so these are internal structures. Okay, here also the market broke structure here. Okay, but then you can clearly see here it started making these movements to the upside. Okay, this is counter trending now. Okay, but on your 15-minute time frame, let's say it broke, I mean it changed character. Okay, at least now you understand why you have certain markets changing character and then all of a sudden it changes character again very fast. It's just from changing character, but then it changes character again. It's because somewhere in the higher time frames you are counter trending. Okay, so here you can clearly see it takes out this internal inducement here, goes up, makes a break of structure above there. Okay, again takes out inducement here, makes a break of structure above there, and then goes all the way down to make a break of structure now to the downside on the on your bias right there. Okay, I really hope people are going to understand this. This is going to be very helpful for you if you just pay attention. Okay, so that's how you can find your bias. Okay, so let me just give you a scenario. Okay, let's go to the 4-hour chart. The 4-hour chart. Okay, that's the 4-hour chart right there. This is all right. So this is the US 30. This is the 4-hour chart. You can clearly see this is the 4-hour chart, and the market is going to the upside. Okay, so like I said, the market doesn't just move in a straight line like that. Okay, it always leaves pullbacks. Okay, and these pullbacks, when you go down to the lower time frames, these pullbacks have internal structures. Okay, so if your analysis time frame was on the okay, on the 15-minute chart, for example, okay, sorry, and you are trying to use the 4-hour chart as your bias. Okay, let me try to mark, just mark this low here. Okay, okay, even here. Okay, so when we go down to the lower time frame, let's go to 15-minute chart. I just want to show you what's happening. Okay. 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 So when we zoom in to the 15-minute chart, remember our bias is where? Our bias is still on the 4-hour chart. Okay. So on the 4-hour chart, we have an uptrend. But here you can clearly see the market changed character here. Okay, the market changed character here. This is on the 15-minute chart. Okay, so there was a change of character here. 15-minute change of character. Now, on the 4-hour chart, you already know that you are in an uptrend, but already there's a change of character here. So you have to be very careful. Okay, this is where I say that even your entries, when the trade goes your way, you have to get out fast. Okay, there's no need of you holding that trade. Okay, because your boss is saying that you are in an uptrend, but here you are trying to sell. Okay, so I already showed you where you are supposed to sell. Okay, you have to sell after the market takes out inducement. Here you can clearly see our first inducement was here, and then the market just reacted to a fair value gap there. Okay, so your target is supposed to be here. Okay, here where it broke structure. This is where your target is supposed to be. Not anywhere further than that. No. Okay, just here and you are out. Okay, if the market started reacting to this fair value gap here, this is where you start managing your trade now. If it doesn't go all the way to your break even, then you can just let it go like that until it hits your target. Okay, so you can clearly see the market, yeah, it continued going to the, okay, it broke structure. Okay, so now here maybe your target should be the 4-hour inducement. Okay, if it just touches your 4-hour chart inducement, maybe you can just skip some of the trades and then just wait for it to maybe make another change of character or something. Okay, otherwise, yeah, this is why I marked again. Okay, so here you can clearly see the market was going all the way down. It was going down. This was the, let me remove this. This is under the 15-minute chart. Okay, this was the last break of structure right here. Okay, this was the last break of structure to the downside under 15-minute time frame, and then the market went up. Okay, so here it changed character here. I don't know if you are seeing anything here. It changed character and then started going to the upside. Okay, now let's just say maybe you missed all of these. Now you can also see how different this is from uh, have you seen how choppy this is here? It's very choppy. It's very choppy here. Okay, it's because this is a counter trend on the 4-hour chart. Okay, of course the 15-minute chart is saying that you are going down, but on the 4-hour chart, on your bias, it's an uptrend. So this one right here is going to be like more high quality. Okay, the trade is going to be the setups, even the setups are going to be of higher probability. Okay, so like I said, when it comes to targets, okay, here you can clearly see the market took out inducement there. Okay, let me zoom in so people can see. So another example here. Okay, if the market, yeah, it took out inducement there. So let's just say maybe you entered on this single candle order block here. There's a single candle order block here. I have a video on single candle order blocks. If people haven't watched, if you want, you can watch. It's still there. It's going to help you out a lot. So there's a single candle order block here. If you entered on this bounce here, and then your first target profit is going to be on this high right here. Okay, this is under 15-minute time frame. And then your next target is going to be on this high right here on the 4-hour chart. This one is just going to be your bonus. Okay, this is how you grow your accounts. Already, you've already secured some of the profits here. Okay, this is not a bad trade. This is not a bad trade. Even if you closed everything here, this is not a bad trade. Okay, you only go all the way there because maybe you just want some bonuses or something. Most of the time, like, you grow your accounts with bonuses. Okay, so this was your high right there. Okay, and then your target, your second target is going to what, to target that high right there. Okay, so guys, this this thing, you don't necessarily need to be doing this every day, but I would advise that you get accustomed to this. Okay, if you are trying to like get a lot of confluence, especially if you are trying to get more higher quality trades. Okay, if you know what's happening on the higher time frames, of course, I'm trying to make um another video on the daily time frame, on how you can use the daily bias. Okay, so the daily bias makes these really big moves. Okay, but it takes very long for it to make a break of structure. Okay, so I just want to in another video, when we do daily bias, I'll show you how you can use uh those candles. Okay, the daily candles. Okay, you don't even necessarily have to look at the break of structures on the daily time frame, or the changes of character or inducement or anything like that. Okay, just looking at the individual candles, okay, you can tell where your daily bias is. Okay, so I think that's it for now, guys. You can like this video, and if you haven't subscribed, please consider subscribing. Until next time, happy trading.